Tariff TNT, Trump rocks the market. Hold on to your hats, folks. When Donald Trump slapped tariffs on China, the stock market went haywire. Remember those wild swings, companies scrambling, investors hitting the panic button? It was a roller coaster ride, and the aftershocks are still being felt today. We're talking about the economic equivalent of a major earthquake, and like any good earthquake, it exposed fault lines in the global trade system. The big question is, what does this mean for you, the investor? How can you protect yourself from future tremors? We're diving deep into the Trump tariffs, their impact, and the lessons learned. Buckle up! America First, the tariff backstory. Trump's trade war wasn't just about tweets, it was about America First, a policy aimed at bringing manufacturing jobs back to the United States and reducing the trade deficit with China. The tariffs were a key weapon in this battle, designed to make Chinese goods more expensive and boost American competitiveness. Trump argued that China was playing unfair, stealing intellectual property and manipulating its currency. He believed tariffs were the answer, a way to force China to the negotiating table and rewrite the rules of global trade. Whether you agree with his methods or not, there's no denying that Trump's tariffs sent shockwaves through the global economy. Market mayhem costs soar, investors sweat. Now let's talk about the market meltdown. Tariffs mean higher costs for companies that rely on Chinese imports. Think electronics, clothing, even car parts. These businesses were caught in the crossfire, forced to raise prices or absorb the costs themselves, squeezing their profits. Investors hate uncertainty, and boy did the tariffs bring uncertainty. Will there be more tariffs? Will this escalate into a full-blown trade war? This fear and confusion led to wild swings in the stock market. Companies with exposure to China saw their stock prices plummet, while others benefited from the trade tensions. It was a volatile time, to say the least. So what did we learn from this trade war? First, geopolitics matter. What happens on the world stage directly impacts your portfolio. Ignoring geopolitical risks is no longer an option. Second, supply chain diversification is crucial. Companies that relied heavily on China learned this the hard way. Finally, don't panic. Market fluctuations are normal. Having a long-term investment strategy and a diversified portfolio can help you weather the storm. The Trump tariffs were a wake-up call. They reminded us that the global economy is interconnected, and political decisions can have far-reaching consequences. As investors, we need to stay informed, adapt to changing circumstances, and make smart decisions to protect our wealth. The dust may have settled on the Trump tariffs, but the lessons learned are more relevant than ever. Geopolitical risks are here to stay, and investors need to be prepared. Stay informed, diversify your portfolio, and don't be afraid to adjust your strategy as needed. Remember, knowledge is power. Now, I want to hear from you. What are your thoughts on the Trump tariffs? How did they impact your investment strategy? Share your comments below, and let's keep the conversation going.